That certainly mirrors kind of the tone that we heard at Computex from the Nvidia CEO Jensen Huang, where he was talking about accelerating everything. And so how does a mindset and an operation of accelerate everything translate through to market cap and valuation for the company from your perspective, and really kind of ramp up where this could continue to move towards in this astronomical growth we've continued to see?
We have a $10 trillion market cap target for Nvidia by 2030, and I will be candid and tell you I think it's too low. The reason is that already we see right now about 60,000 GPUs in the data center. Jensen Huang said on stage that we will go toward a million GPU data center at some point. So 10 trillion could even be too low, and here's why. One generation, which is Hopper, gave us a 1.5 trillion push. So now we have 4 additional generations that they've laid out for you over the next 4 to 5 years. Now you got to add on software, and you have to add on something like the Omniverse platform, which is how all robotics, likely a near monopoly of robotics, will be developed, because they're the simulation company coming from gaming roots. They basically have an engine and a software platform that will allow robotics that is so far ahead that other companies are going to have a hard time competing. And that comes from simulation roots already. So when you combine, now you have software to think of, you have automotive to think of, you have robotics to think of, and that's already pushing us easily past 10 trillion by 2030. Of course,
and Beth, just quickly, on what kind of market share are we talking here? Because I mean, there is a competitive landscape where we got to imagine that none of the other chip companies are just going to fall in a ditch.
I estimate that AMD is capable of taking somewhere between 10% to maximum 20% of the market. This is based on the gaming competition these two companies have had for some time. Intel, they are moving well past 20%. Intel's an easier competitor than Nvidia. I think Nvidia clearly is going to be a tougher competitor for AMD. So I would say 10 to 20% AMD on GPUs.
When you take a look, Beth, at least at Nvidia's valuation right now, the massive run-up that we've seen, in the near term, do you see, I know you're seeing obviously a huge opportunity here over the next several years, but in the near term, do you see any sort of the fact that the valuation could be stretched at all?
That is probably the most important question, which is not where will Nvidia be in 2030, but are we buying now? And it's not actually a valuation concern, because we're talking a company that has gone up 600-700% on the bottom line. So valuation actually is quite reasonable because of all these raises and beats. What Nvidia is going to need is broad market participation. And if you look at the broad market, things are a bit weak. So the best time to buy a stock, in our opinion, is when broad market is participating, which means can Nvidia hold off on a broad market sell-off? Can it sustain? And that's the question that tech investors need to understand, is that at times it has nothing to do with the stock. It has nothing to do with the individual management team or these amazing fundamentals or the valuation, which we are calling eerily low. What it has to do with is broad market and sentiment.